Good morning, ladies and gentlemen, and a warm welcome to Arutha's inaugural conference, the Debt and Tax Dialogue. Thanks for being with us this morning. Now, I would like to invite Honorable Dr. Anil Jayantha Fernando to address the gathering. We sincerely appreciate your presence today, despite your busy schedule. Honorable Dr. Anil Jayantha Fernando is a Member of Parliament and currently serves as Minister of Labour and Deputy Minister of Economic Development. Yes.
Thank you very much. It's my great pleasure to be here. It's a very special gathering to talk about debt and taxes. Especially they are key the variables in running good government. Unfortunately, I will not be able to stay here for long. So in 5-10 minutes time, I have to leave. Let me just give you an overall idea about our perception, our orientation about the taxation and the tax policies. In fact, tax is a revenue to the government, but it is not a revenue. It is a shifting of revenue from one place to the other. The revenue is generated in the economy. So therefore, the focus is how best we should take initiatives and facilitate the economy to generate value first. Then we can come out with the other options and the proposals and the policies to have a kind of tax the system which is pretty much fair, efficient, and more stimulus for the economic development. We have to do lots of the reforms. We strongly believe that technology can help in pursuit of doing that to great extent. We talk about taxation from different perspectives, but if you just go into the details of taxation, it's not going to be a rocket science, very basic things. So then the technology can solve lots of problems. Finally, where are we taxing? So basically, tax is imposed on income. Basically, we talk about the tax on income, tax on value or the spending, that is the ad valorem, and sometimes we talk about wealth. So these are the key pillars. As far as our government policies are concerned, so individually, so your experts and we can come out with different proposals of making a vibrant tax system. But we are ready to really adhere to the basic principles of the fairness, the progressiveness. Then again, the question arises, what's really meant by fairness? Because fairness is not a very unique, it doesn't have a unique definition. Definition is there, but you can interpret it, what's fair. When you look at the tax system, different the stakeholders, different we have different identities, business communities, or sometimes we call taxpayers, and the employees, investors, likewise you may name. What happens is the challenges that we face until we bring everything converge or integrated into a very sophisticated system, always there is a risk that we may look at from our own perspective about the fairness. So I am ready to have the fairness among the others, but not me. So let me operate within my own territory and my autonomy. Don't talk about me. I pay this much, this is my fairness, this is what I can pay. That would create problems to me. So you better be fair. So I'll give advices. So this is where you can collect taxes. This is how the fairer tax system is coming on. So this is one big challenge that we are facing as of now. From the government perspective, we look at from a very broader perspective, from the national perspective. Of course, that is connected to the international as well. In a way, we can't, to some extent, we can encroach to international territories as well. So to have with the minimum, the global taxation, the transfer pricing also has become another issue. Of course, there are limitations and constraints of doing these things, but we are ready to explore the possibilities of just, having the fair situation in international transaction as well. From Sri Lankan fairness, we have to look at from that particular perspective, from a very broader perspective. So in that regard, if we can establish in the future a tax system where the earners or the persons who earn more should pay more and who earn less pay less. So that is a starting point. That income is the one that goes for spending. That income, the part of that particular income that goes for your wealth. Until we reach up to that particular level, which is supported by the technology, so we may have to think of other sources of taxation as well. I think at this particular juncture, we need to be very pragmatic and think of a kind of fairer tax system based on income taxes or the wealth taxes or the ad valorem taxes, and we are ready to implement such policies, and we are ready to, and we are really taking actions to have or the facilitate it through more digitalized economy. This is what we take. But it doesn't mean that we have done everything right as of now, but we are in that particular course of action of doing the right thing to implement best digitalized system in this country to track and trace everything. So at the same time, if we are going to be good citizens or good humans, as we say and as we claim that always we need to be ethical. Ethics means what is the right thing to do. So you have to question it, this right thing to do, look at from the humanistic point of view, look at from the national point of view. I think lots of problems can be solved, and in the future we can have a better, vibrant tax system that would really serve the nation. So thank you very much for giving me opportunity and just being here. I wish you have a very great session and good panel discussion. So I will just get the brief later on. Thank you so much again.
Thank you, Honourable Minister, for your words and for gracing our occasion despite the change of plans. A very good morning to everyone. My name is Rehana Taufik, and I am the co-founder and director of civic education at Arutha. On behalf of our entire team, it is my great pleasure to welcome you to Arutha's inaugural conference, Debt and Tax Dialogue. Let me begin by extending a very special welcome to our distinguished panelists, Dr. Chandranath Amarasekara, Assistant Governor of the Central Bank of Sri Lanka, Mr. DPS Hapuarachi, former Commissioner General of the Inland Revenue Department, Ms. Sara Afka, Head of Tax Services at BDO Partners, Ms. Romali Tudave, CEO of Tudave Brothers and advisor to Arutha, and Professor Mick Moore, political economist at the Institute of Development Studies and advisor to Arutha. We are here today to reflect on Arutha's work that we have undertaken over the past 2 years and to engage in an important discussion on public finance, a subject that lies at the heart of Sri Lanka's economic stability. Since April 2022, Sri Lanka has experienced quite a remarkable recovery. Reforms have been crucial in steering this process, and strengthening these reforms remains vital to ensuring long-term stability and growth. Taxes and debt, as we know, are two sides of the same coin, and today we will be exploring how they shape our economic future. I would like to take a moment to acknowledge the efforts of our small but mighty team, Yolani, Umesh, Roji, Charuka, Amalini, Shehara, Yenuli, Shaheen, and Ali for putting together this very impactful event. A heartfelt thank you also goes to our partners, many of whom have supported us not only over the past 2 years, but also even before Arutha came into existence. I just want to briefly share our story, Arutha's story. During the economic crisis, a group of us came together to counter the misinformation that was quite widespread at the time. We created default.lk, a platform to document, explain, and educate people on the causes, consequences, and the potential solutions to the crisis. What began as a group of young economics enthusiasts soon evolved into a formal organization, and thus Arutha was born. Over the past 2 years, we have stayed true to our mission of educating the public and advancing economic reforms through research and dialogue, and with a strong focus on public finance. Today's dialogue is part of that journey. Throughout the day, you will hear from Arutha colleagues on our research, followed by panel discussions on taxation and Sri Lanka's economic outlook. We hope that these conversations will offer valuable insights, spark new ideas, and foster collaboration amongst all of us gathered here. I encourage you to participate actively and to share your perspectives. Just a quick run-through of the day ahead. Our first portion is on taxes, where we will have a presentation followed by a panel. Following this, we will break for tea, and then our second portion will be on debt and beyond, which will also feature a presentation and a panel. After this, our day will close for lunch. Let's get right into our first session. Please join me in warmly welcoming my dear colleague, Yolani Fernando, Arutha's Executive Director, who will present Arutha's work on taxes. Thank you.
Distinguished guests, ladies and gentlemen, good morning. Thank you all for being here. I have the rather unenviable task of starting out your morning by talking about something as boring as taxes. I will try to, as much as possible, I will try to make it painless. And I think, sort of one of the ways in which, I will attempt to do this is by maybe not talking about taxes, but talking about a slightly deeper story and something that we at Arutha constantly think about and are working on from different perspectives. So, as my colleague Rehana kind of pointed out, Arutha has an interesting standpoint because we are straddling two worlds and two sides of this tax story. On the one hand, you have government. Specifically for us, the Inland Revenue Department is a central actor in most of our research. And then on the other hand, you have the citizen taxpayer, the central figure in our civic education. And when we talk about the citizen taxpayer, we have what you would sort of consider the more visible taxpayers and the invisible ones. And the invisible taxpayers are all of us. Every person who has ever bought anything is a taxpayer. And what we often find with our civic education is that it is the invisible taxpayers who don't know the tax burden that they are bearing. But this is, of course, a central feature of indirect taxation, and our tax ratio is skewed towards that. But if we talk about visible taxpayers, I think there is a truth universally acknowledged that nobody really wants to pay their taxes, even if we do. And the universal gripe is, of course, not something unique to Sri Lanka, but when we talk to people about paying their taxes, we generally find that there are two, sort of categories of things that generally come at us. One is a problem of paperwork. the hassle of it. Nobody wants to do that. And the other is this idea of giving my money away for nothing. Now, the paperwork, yeah, it's an administrative issue. It is an issue of communication. It is an issue of Inland Revenue Department's relationship with taxpayers. But the other one is a myth, especially in a country like Sri Lanka that has benefited from public healthcare and public education. But it's not a simple misconception. And it is not something that you can be dismissed out of hand. It is a deep-rooted issue that warrants our time, our attention, careful thought, and precise action. So, I'm so glad that the minister, talked about the fairness aspect as well, and so I will also be talking about that. And this is basically a summary of what we at Arutha constantly hear whenever we try to educate people about paying their taxes. There is, of course, the general idea of my money will get lost to corruption. And I think the corruption narrative has dominated the discourse around the economic crisis. There is a sort of a severe misattribution that everything related to the sovereign default and the economic crisis can be chalked up to corruption. But the misattribution doesn't take away from the fact that there is a trust deficit. And on the case of fairness, people very rightly tell us generally that why should I pay my taxes when I know that guy isn't paying, that guy isn't paying, they earn more than me. And we really don't have answers when people kind of say this to us, because it is true that there is an issue of tax evasion. But there is also a different aspect here that, again, the minister kind of brought out, that people do also have this understanding that there are ways to tax wealth that is beyond simple, tax the wealthy beyond simple income taxation, which we will also cover. But I will sort of focus first on the disconnect that we always sort of see and hear about. And this is sort of a kind of a deeper problem, because one of the things that I love about Sri Lanka, mountains and beaches aside, is the strong sense of civic duty that I see in our population. And this is apparent in our voter turnout. You look at the past 6 elections, lowest voter turnout was nearly 60%. We consider that a bad voter turnout. And even if you go further back as 1999, past 13 national elections, the lowest you will see is 60% in 2010. Again, something we consider bad, whereas all the others are 73% and above. So when you look at the Sri Lankan population, clearly there is a great sense of civic duty. Our problem is that it doesn't necessarily translate to paying your taxes, and we have no conversation, we have no idea about it, we do not have a tax-paying culture. But there is blame to go around. This is not, sort of something that is purely within the hands of people. Because in our politics, citizens are seen as voters, beneficiaries of social services, but rarely as stakeholders. And definitely not stakeholders that have any skin in the game when it comes to government revenue. And without that shift in perception where politicians and the state see us as stakeholders and we accept that role, we will not sort of see a change in our tax-paying culture. So just a quick thing on the political economy of taxes. This is covered a little more extensively in our report on the political economy of debt. This is a story that we all know about, that Sri Lanka for decades has, kind of relied heavily on border taxes, to the detriment of direct taxation, to the detriment of the Inland Revenue Department, and that's a policy of tax concessions. It's an inconsistent policy as well. Just a couple of examples of what that looked like. I mean, sector-specific exemptions for corporate income tax, tax exemptions for large-scale investments. But also particularly low personal income tax rates, which we have sort of seen that it has kind of created this unfortunate culture of expecting more than we are willing to give. And it really exemplifies a quote of the economist John Robinson that says that Sri Lanka has tasted the fruit before we have planted the tree. And this is what we kind of see quite often when we talk to people, that they don't quite have an understanding of how much the state does do for us, while acknowledging that, of course, there's always more to be done. But let's talk about the trust deficit. During the economic crisis, definitely trust in state institutions were at an all-time low. I would say that it hasn't quite recovered since then. But we cannot expect the public to initiate this. It is the responsibility of the state to make that first move. And I think that when we look at the Inland Revenue Department, especially in our research, we see two sort of ideas that really come out at us. That really affects the the public trust in the Inland Revenue Department. One is what we would generally term the clerical approach to taxes, and the other is the lack of fairness, or the perceived lack of fairness. And when we say a clerical approach, we sort of see that lots of taxpayers that we talk to kind of feel that the Inland Revenue Department definitely does not trust them, and tends to go after them on very specific and minute details. And the other is that people don't see the Inland Revenue Department going after big evaders. So it begs the question: why would any citizen trust a system that doesn't trust them and does not treat them fairly? So when we look at IRD's kind of clerical approach, it's really a box-ticking exercise, focus on minor discrepancies from salaried employees, SMEs, and the result of that is not necessarily more taxes. It is, harassed, compliant taxpayers who feel unheard, who feel it's unfair, and it really destroys any hope of building trust between these two parties, which we see as a significant issue, considering that we are moving towards, or at least attempting to move towards, greater income taxation. First, one of the key issues with this clerical approach is that it completely misses the big picture. Because such a model really misses the bigger risk that are posed by high net worth individuals, complex corporate structures, illicit financial flows. And we generally ask ourselves, why is this the approach that IRD has taken, and why does it continue to take this? And the answer lies again with that historical issue of focusing on border taxes, relying on customs, and neglecting IRD. And that neglect is decades long. Every government has done it, so again, enough blame to go around. But what that has resulted in is a crippling of IRD's capacity, and of course, you sort of see that lack of political will for serious tax reform, especially because it has always been politically expedient to not rely on income taxes. And that's, again, a point that we make in several of our publications. So I won't spend too much time on the path forward. We have an excellent panel that will talk about pragmatic, implementable tax solutions. But let me just lay the groundwork. As far as the IRD is concerned, the best way forward, as Arutha sees it, is to move towards a risk-based approach. That means trust in people on the small things. Don't sweat the small stuff. Simplify compliance for those who are already compliant. And instead, considering IRD's issues of capacity, focus those limited resources on the larger issues And what that means is aggressively pursuing high-value evasion and complex avoidance, and just basically, again, using what you have, using those limited resources in a slightly, more, I would say, practical manner. On the side of the government as a whole, the path forward that we see is that the government has to make that move to initiate trust. As in any good relationship, somebody has to make the first move, and on this front, definitely it should be the government. And we see three broad themes under which this, could happen. And one is adopting a policy of radical transparency. Now, this can be in terms of publishing clear, accessible data on revenue and spending so that taxpayers know exactly what it is that their money is going towards. And the other is employing a policy of earmarking taxes for social goods. These are not new ideas. There are plenty of countries before us that have adopted these sorts of initiatives, especially when they are pursuing radical tax reform and you need people to get behind it. The other is, of course, again, what the minister was talking about. Definitely we echo his thoughts about demonstrating fairness. And there is two parts to this. One is rigorously enforcing existing laws, existing taxes, going after evasion at the top. And the other is really looking at the wealthy and the connected and looking at ways in which wealth can be taxed. Now, I will caveat this by saying that you can tax wealth without having a wealth tax. And this is the central kind of argument in our report as well. And the proposal that we have is that focusing on property taxes is the most pragmatic way to start out this conversation and get people behind it. So while we kind of adhere to these principles, we also adhere to the central principle of pragmatism. And finally, of course, I think investing in IRD, yes, it goes without saying. We talk and work with IRD officials all the time, and we definitely feel that they need that support in terms of funding and technology, supporting recruitment to become an effective and modern tax administration. Considering that after the economic crisis, there's been so much weight, so much burden put on this department, we think that it is warranted. So I started out this presentation by saying let's not talk about taxes, but what I really mean to say is let's talk about taxes a bit differently. Because when we talk about tax reform, we're talking about governance, we're talking about rebuilding a weak, unstable social contract between the state and the Sri Lankan people. It also means choosing sovereignty and accountability over debt and dependence. And I think as part of, co-part of Arutha's economic civic education is that we are always trying to find ways to stop talking about taxes as us giving away money, and talking about taxes not as a loss, but as us collectively investing in a Sri Lanka that we want to see, a Sri Lanka that we want to build, and a Sri Lanka that we want to live in. Thank you.
Thank you, Yolani, for your insightful presentation. We will now proceed with the first panel discussion of the day, Tax Solutions, Fair, Just, and Efficient Taxation. Joining us for the panel are Professor Mick Moore, Ranjit Hapuarachi, Sarah Afkar, and Yolani Fernando will moderate this panel. Professor Mick Moore is a political economist at the Institute of Development Studies and a senior fellow at the International Center for Tax and Development, focusing on taxation and governance in developing countries. He has conducted extensive research across Asia and Africa and is an advisor to Arutha. Ranjith Hapwarachi is a former Commissioner General of the Inland Revenue Department with around 4 decades of service in tax administration and policy. He has extensive expertise in tax compliance, international affairs, and stakeholder engagement, including public education and professional training. Sara Afkar is a partner and head of tax services at BDO in Sri Lanka and the Maldives, with expertise in tax compliance. She's a fellow chartered accountant with additional qualifications in Islamic finance. Yulani Fernando is the executive director of Arutha, leading its tax research stream. She previously held roles at the Ministry of Finance and the Asia Foundation and is a Chevening Scholar with an MA in Governance, Development and Public Policy from the Institute of Development Studies.
Thank you. I thank you so much to the panel who have come here, in the morning to talk about our favorite topic. We are grateful to have such a wide range of perspectives here on the stage, and I'd like to start off with Mick, if you don't mind. I think, something that definitely so the minister also sort of hinted at, and something that, we are quite keen on is, property taxation. And it is, I think, increasingly a recognized tool for promoting progressive taxation, particularly in developing countries. But it is, so wealth is especially difficult to track. Do you sort of see, give us a few thoughts on sort of the implementation of property taxes and the administrative challenges, especially at the local level, and just based on your work, what lessons can Sri Lanka draw from experiences in other countries? Over to you, Mick.
Thank you. Is this working? Can you all hear? Okay, very good. Good morning. Okay, thank you for that question, Yolani. It is actually, property taxes are actually very close to my heart. And that's not because I'm emotionally stunted and cannot engage with normal things, but they are actually really important and they're very significant, and especially at this moment in Sri Lanka. So, 2 things are particularly important as background. One is the government has agreed with the IMF that it will introduce a property tax. The second thing is that the government has already begun to take an important background step, which is to reduce each year the transfers it makes to local councils in order to give local councils some incentive to raise their own revenues. Property taxes is what we call the assessment rate. I'm going to call it a property tax because that's the standard international language, but it makes no difference. Now, the assessment rate in Sri Lanka raises about that much revenue or a little bit less. The total revenue raised probably doesn't do much more than cover the cost of collection overall. Very few local councils make much effort to collect the assessment rate. Those of you living in Colombo may appreciate that the only way you can pay your assessment rates is with a check. Now, some people still have checkbooks, a lot of us don't, a lot of people never had them. But that is a sign, in a sense, of the lack of effort put into this. The revenue is tiny. But there's another thing that's actually changed. And Sri Lanka is not that different from many other countries, but we are happily in a situation now where the underlying technology has changed enormously. And I'm not a techno freak. I'm not the kind of person who says, here is a new technology fix. And of course, it's not a fix, but it's about half a fix. And there's a completely different way of doing this now. The key constraint well, there are many constraints on property taxes, but a key constraint is that we still have the system where the individual, professional, relatively well-paid valuer goes around from house to house, commercial property to commercial property, inspects it inside, outside, fills in a form, and then assesses the annual rental value of that. That is no longer necessary. It's no longer necessary because we have a set of technologies now which are new but proven that can basically do this using digital techniques. Key digital techniques, well, there's GPS, which is quite old technique for geolocation, digital photography, and a whole lot of software. And the way that this thing goes by many names. I'm calling it points-based valuation, mass computer-aided appraisal. There are various phrases. It's the same bundle of technologies. And what you effectively do is identify properties, geolocate them, take digital photographs of the outside, and on the basis of that, most properties, excepting some high-end high-rise blocks in Colombo, you can do a good enough valuation of the property for purposes of collecting property tax. There's a lot of technical detail in that I'm not going to go into at the moment. But the point is, this technology works. It's being used in Britain, Wales this year in order to revalue for property tax. And it has been used recently in quite a few cities, especially in low-income countries, to virtually reconstruct a property tax from scratch. Now, of course, this is not without its problems, and the biggest problem is it's a bit of a technological leap. But it's not actually that big of a technological leap, because what you basically need is a few digitally literate young people and the ability to use the technology that comes from elsewhere. So I'll conclude by saying I do have a paper, which is a proposal on how this should be done. I have a few copies, happy to give them to anyone else, but if anyone else could give me or Yulani or someone their email, I'm happy to send that proposal, which is anyway going to be published by Verite in a few weeks at most.
Now I'll turn to Sarah. So we've talked a lot about the trust deficit and I just want to kind of touch on how the trust deficit affects the tax system and tax morale, especially, or more precisely, the desire to pay taxes, and what the key challenges you see in building trust in Sri Lanka's tax system, given your experience working with individuals, businesses, and what are the practical ways in this can be addressed?
Thank you, Yulani. A very, very loaded question for which you've actually given the answers on your slides. So since you stole my thunder, and since I'm an accountant talking to a bunch of economists rather, I thought I'll start with Adam Smith, who you all worship more than I do. He actually came up with something called the canons of taxation, which I'm sure you all are privy to. 4 canons to dictate a good tax system. There should be equality, certainty, convenience, and economy. Equality basically means that taxes should translate into social justice. Certainty is, again, something where taxes shouldn't be arbitrary. It should be certain. Convenience, do you know when you have to pay your taxes? And of course, economy, a very important aspect of it. How about the cost of collecting the tax? Is that more than the tax itself? So on those lines, if I'm to put my experience, today actually marks 18 years since I've been in tax advisory. I personally don't think that Sri Lanka's tax system is in line with all four canons that Adam Smith sets out. And a few reasons. When it comes to the perception of taxation, like you rightly said, people would always ask me, what are we getting? And I'm sure most of you around the room also would be like, I'm paying so much of taxes, what are we getting? End of this month marks the final payment of income tax for 24-25. We've worked the numbers for so many of our clients. The numbers are pretty large. And then they come back and say, you know, we're doing all of this, but we're not really getting the right return. So ideally, transparency in spending should be one of the key ways in which the money can actually, you know, be shown as it is for the social good. Secondly, awareness. Now, again, since Arutha started in and around the crisis, Umesh and I, we did something called Twitter Talks, and it was done during a power cut, during those times when we had power cuts, and it was on Twitter because my clients don't need Twitter. My clients have access to me and to the vast universe of tax practitioners. But when it came to awareness, one of the things we realized was most people, it's not that they don't want to pay tax. They don't know. And they're not, the complexity in tax hasn't really made it any easy for them to understand when and how much to pay. So when we did that, I was actually apprehensive as to whether a Twitter audience would actually connect, but we had quite a bit, and Zumesh here, we had quite a bit of calling and a lot of people asking questions. And so many people didn't know that there are concessions that they could avail of. I don't know how many of you all around the room know that if you install solar panels in your house, you can get a certain tax relief. So awareness is one thing, and then the general fear. You know, you look at the inland revenue, or you look at taxes. My colleagues are here as well. The people who would come to us saying, oh, I got a red notice, and we'd treat it like coconut husk, but they'd be like, oh, I got a red notice, and they panic, and you know, they spend sleepless nights over it to say it's just one of those system-generated documents to you, which you need to reply. But it's that fear factor, and that, again, can be very much circumvented, or what shall I say, resolved by education, that tax is not a difficult subject, it's not complex, it's just something that maybe could even be inculcated into our school curriculum in a way that it's easy to understand. So that's my initial thoughts. Have I answered your question?
Yes, definitely, and extensively. Thank you. I'll just quickly turn to Mr. Habwarache, because sort of when we talk about trust, definitely something that keeps coming to mind is the IRD's relationship with taxpayers. And actually, in your time as the Commissioner General, one of the initiatives that you introduced was the Taxpayer Charter. So maybe you could share with us a little bit about the motivation behind that and what other steps you sort of see as necessary to strengthen this relationship as we go forward.
Okay, thank you very much, Yolani. And after your nice short presentation covering everything that we should talk about in this subject, in this aspect, I mean, when we talk about today's topic, I think it's nothing much left to talk. But let me start with the background that after reaching a very high target of actually trillion in 2019, and after it's like a gamble. I think, Sarah, we talked about this even some time back. Playing a very, maybe ambitious, but typical, it's a gamble, and reaching that revenue next year, somewhere between 500 to 600 billion. And again, increasing taxes everything happened within a couple of years. So great burden again for the taxpayers after that tax cut. So just think about, and also added to this is a highly corrupted country. So those are the things we have to think about when we talk about the background of taxpayer charter. Not only taxpayer charter, actually we initiated that even before the IMF guidelines. IMF came to Sri Lanka with a diagnostic mission, and they helped us a lot. But even before that, we have understood within the IRD that some actually up against the wall, some measures to be taken, right? That's why we thought about a comprehensive tax charter covering taxpayer, some say obligations, but I like to say responsibilities, social responsibilities, and also their rights. And not only that document, at that time we initiated and published 2 documents. One is charter, the other one is prevention of corruption in the IRD. And also 2 more documents. One is, that's of course internally published, but I think now should be published publicly, I think. But anyway, one is about the issuing of assessment, maybe amended assessment or maybe additional assessment. And also another set of rules, set of instructions regarding administrative reform, administrative, what do you call that appeal? No, review. Sorry, administrative review. Yeah, that's the appellate system, the taxpayer right. So all these 4 documents were ready, and I managed with a lot of difficulties to put it out. So, okay, Yolani, coming back to your question, that's the background, right? That's the motivation to do all these things. And we are talking much about taxpayer trust as well as transparency. So the transparency should be given to the public with proof, right? So we have to, if just think about something like this, your hard-earned money, maybe the general public, maybe the corporates, or maybe any kind of taxpayer. You are paying taxes out of your hard-earned money. And you see, your presentation was very nice in that respect. Actually, you see that at the end of the day, you are not a happy person. What's the fairness? Actually, I understand. I think the fairness is something like everyone should be happy. Taxpayers should be happy at the end. Okay? In the tax system, you can find, as I define, 2 pillars and 1 bridge. So the first pillar is the tax policy, which comes to as the tax statutes. The other one is taxpayer. The bridge is the tax administration. That's the way I define it. So at the end of the day, every aspect should be happy if it is a fair and effective tax system. So our topic is that today. And I think in this background, a lot of things to be done still by taking time. IMF is also working with Sri Lanka, building trust and transparency. And also not only that, maybe as far as make the things simple, maybe the regulations, laws, maybe the procedures, probably maybe the declaration forms and everything. Further, those should be made simple. The other one is digitalization process should be, actually enhanced and should be user-friendly. The last one I just want to point out is, thereafter, you can give the message to the public and all taxpayers that actually these are the things that we want to change. Maybe now we are in a good situation, right? And then maybe next year we are going to increase these taxes. We are going to introduce something like a property tax, something like that, a message. So if time allows, later we can talk much on that. Thank you very much for your question.
Thank you so much, Mr. Haparachi. So maybe kind of going off what you were talking about, I can turn again to Sarah, and maybe you can talk a little bit about shifts that you have observed in compliance in Sri Lanka, especially sort of pre-crisis and now, and if so, like what would contribute towards encouraging and discouraging that compliance, especially given, you know, what Mr. Haparachi was saying about taxpayer relations with IRD.
So on compliance itself, I'm sure all of you are aware, Sri Lanka operates on what we call a self-assessment regime. The state won't come and tell you how much of tax you have to pay. You have to willingly figure out how much, and then you pay what you think is your correct tax, and they will thereafter audit you and tell you, hey, you got it wrong, or you got it right. And more often than not, you may have got it wrong. So one of the reasons what discourages compliance is that complexity. Have I figured it out correctly? And of course, with all, a lot of merit to the Inland Revenue, they've done a couple of awareness sessions. They have tried to, reach out to the younger crowd with YouTube channels. Back in the day, the trainings would only happen at the head office. But now it's on social media, and they do go around. There was a taxpayer week this year where they went around the country educating people. So there is a lot of effort taken. And in terms of compliance itself, I plucked a few numbers from the Inland Revenue's Performance Report 2024. How many people have filed on time? The large corporate taxpayers, those from regulated sectors, have filed their taxes on time. That's about 92%. That's a very high compliance rate. The SMEs, or rather what they call the other taxpayers, maybe they're not so large, or the other non-corporates, is only 29%. And that's an industry which needs a lot of hand-holding and help, not only in terms of taxes, but also in terms of financing. But compliance is low, and it is slow there. Also because there is this tendency to figure, why should I pay? And the tax rate jumped from 14 to 30. Is it fair? We can talk about that, but by and large, is that something that you would focus on? And individual income tax, which is pretty much all of us and the vast universe of taxpayers, is only 13% have filed their returns on time, according to the Inland Revenue's Performance Report. So much to be done on the individuals, and the Inland Revenue has opened 456,000 new files in that year. But the rates were increased, the slabs were reduced, the threshold was brought down. Why are people staying away? My observation, now, I'm going to connect it to what Mr. Haparachi said. In 2019, we reached $1 trillion for the first time. And then in 2020, we lost $600 billion in tax revenue. Of course, all of us enjoyed it. It's not that, the Inland Revenue lost. We all enjoyed the effects of that. And then what happened? There was a sudden, massive tax that was brought in, the surcharge tax, penalizing the larger corporates, saying, pay this one time. And that one time has happened for the second time, because we had the super gain tax a good couple of years ago as well. And then an amnesty was given, the voluntary tax, you declare we won't, this thing. So each time things go wrong, there is a quick fix. And people tend to wait for the next amnesty. So you might have to use the stick when people are not voluntarily complying. Fortunately, they've got withholding taxes back. That's one of the easiest ways in which a state can collect taxes. I know it's very painful. Your income is taxed at 10%, but of course they have come up with ways and means for people who are below the threshold to give declarations and things like that. But the most important thing is to have consistent tax policy. Year on year, you can't have quick fixes. And fortunately, I think for the first time, between last year and this year, we've not seen a change in the tax rates, and the tax return looks identical. But the past 5 years, this is the first time we've noticed that. Those are little things I think we can, even if the tax rates are high, you should have certainty and the policy should be consistent. That is what it is.
Thank you so much. And I think, you brought up an important point about sort of communicating to young incoming taxpayers, and that's something that Arutha is doing. We are launching a new video series on social media called Tax Talks in the next month in Sinhala and Tamil, and we are focusing on making taxes a little more accessible to young people, as fun as kind of it can be. So let me just turn to Mick again, and just sort of kind of based on your research outside of Sri Lanka as well, what do you sort of see as the most significant internal or institutional constraints within revenue authorities sort of outside of Sri Lanka? Do you see those same things or something different in IRD? Because we can talk about tax policy till we're blue in the face, but at the end of the day, it is, tax administration is tax policy. And, sort of whatever, sort of things that hinder it, do you see any realistic ways to address this within the context of very real ongoing fiscal pressure?
Okay, thank you, Yolani. I think actually I'll try and articulate where I think we are at the moment, but I think it's quite important to approach this historically, because history has really put all kinds of constraints on what we can do at the moment. Now, before the economic crisis, very few people in Sri Lanka, very few politicians, very few governments showed much interest in tax. I'm going to have to make an exception here because Mr. Eram Wickramaratne is sitting there, and he is one of the honorable exceptions, so I would like to recognize that. But generally, there was very little interest, and the tax ratio declined and declined. That situation has changed enormously, as evidenced by the fact that we are here. And since the crisis, there's been a lot of discussion, and I think we've moved quite a long way. I wouldn't say we have a consensus about what needs to be done, but I think we're much nearer a consensus than we were. I think well, let me just quote a friend of mine from a distinguished international organization some months ago, was doing a review of customs here. And he said to me, customs in Sri Lanka, in terms of its organization, its work methods, is about 20 years behind many African countries. It's not very nice to hear, but to be honest, IRD is pretty much in that same ballpark. It's not that very far away. We've seen quite a lot of progress recently in raising the actual tax levels. We're now at 15.1%, which is kind of on the IMF target. It won't stay at that level because some of that is by raising rates, but some of it is the bonus from delayed motor vehicle imports. So the government is going to have to do more to just to keep it at 15%. And I'm sure they will do more, and there's plenty of scope. If you look around at the tax schedule, there are so many ways in which, in principle, things could be improved. To give a sort of small example, those of you who are privileged enough to maybe own a part owner of a private company and you pay yourself in lots of dividends, you're paying a withholding tax of 15%, and that's final. In other words, you're paying 15% income tax on what could be very high earnings. So, please enjoy it while it lasts, but I hope government will pick on that quite soon. But, so there's a little more scope to do things with rates just to keep keep us up to about 15%, and 15% is actually significantly lower than most countries at Sri Lanka's income level. Countries at this income level, on average, will be about 20, 22, 23% of GDP as tax. So we're still fairly low. But I think we've also realized, as we come to look more and more at this, that we have really serious problems with tax administration to which there is no obvious and simple answer. And it's not just a matter of political will and wanting to do it, because the constraints are really serious. Now, I know more about IRD than I do about customs, so I'll say a little bit about IRD. As I think all of you know, IRD was quite late to digitalization. But again, there's been quite a lot of progress on that recently. Ramesh is catching up. So, we're going pretty much in the right direction. Where we have the really serious problems is in recruitment and training of staff. Now, the recruitment of staff, well, we could give a very long list of the problems, but this is really locked in to law and practice and relations between different government organizations. Nothing that the Minister of Finance could solve tomorrow if he wanted to. It's just incredibly difficult. But we are not recruiting high-quality people, which is not necessarily a big problem. You don't actually need great high flyers to collect taxes. You need fairly competent people. But we do, on the whole, need to recruit people who have either some background or can quickly be trained in numerical analysis, for example, knowing numbers. And the current exams set for IRD entry, I won't talk in detail, I'd venture to say they are almost completely inappropriate to the job of being a tax auditor. So IRD is in the position of taking people, and they'll soon be taking more people, who have very little relevant background. So I think that recruitment process should be changed, but it's going to take quite a long time, and it's not easy. So the onus is then on the IRD to do better and more internal training of the recruits it has. I don't know the detail, but having talked to a number of people, I think it is almost certainly true that there is quite a lot of scope to do more. That's good. But there is actually a bigger problem here that, again, is very hard to solve. And let me just go back to what people, the average tax auditor in IRD, should be doing on the average day. And Yolani summarized this earlier. At the moment, too many people in IRD are spending too long on clerical jobs, which is basically looking at tax returns and reconciling them and trying to find out problems. Either numerical problems, and this doesn't reconcile with that, or documentary problems. This document in support of your return doesn't seem to have the right date or whatever. Now, that's a reflection of the past. And if IRD is to be more efficient, the typical tax auditor is going to be spending her day, half her day, quickly going through a whole lot of tax returns and saying, that seems fine, that seems fine, that seems fine, and spending the other half of the day auditing particular returns that have been identified through a statistical analysis as possibly needing real attention. So, if she's coming across the tax returns of a company that does contract office cleaning, she will need to look at things like, well, what's the record of this company? Do we have a reason to believe that they've been not sending honest returns in the past? What do their accounts look like? Do they actually look like other office cleaning companies? Is there something funny about this? Do their expenses seem to be very high, their income low, etc.? I mean, when we get to that position, much of the problem will be solved. But we can't get to that, or it's going to be very difficult to get to that position until the IRD has more competent people in IT and computers and in data analysis. Because this is all data analysis, not clerical stuff, it's adding together numbers. And at the moment, there seems to be, it's not clear how IRD is ever going to be able to recruit those people. So I'm going to stop there on the sort of what I think is the biggest problem.
And I think, sort of the point about data analysis will be a topic of one of our briefs coming out next month as well. So let me quickly turn to Mr. Habwarachi just for a final question with regards to sort of tax compliance. But I will also kind of, if you do want to, comment on the recruitment issues, I would also sort of give you the opportunity to do that. But we did want to sort of talk about sort of in terms of tax compliance, what steps IRD can do to simplify the information, because we keep hearing this idea of simplifying tax compliance, and it is frustrating for taxpayers when it feels like you're hitting a brick wall constantly. So what are the real measurable steps that the IRD can do in terms of facilitating that?
Okay. Regarding your question, I think, regarding the question, I think we have to again think about several aspects. When we talk about compliance, the total compliance or the comprehensive compliance is not just submitting the return, tax return. Actually, even IRD understood it as submitting the return is compliance, but compliance is reporting compliance, and again it goes to return compliance, reporting compliance, and payment compliance. Everything should be fulfilled by the taxpayer in a correct manner. I mean, when you say reporting, it should be the correct tax amount, like that. So, without any enforcement action, so that's the thing, right? Okay. Actually, as we know, as we experienced throughout the decades, it was very difficult for a general or ordinary person in this country, individual, I mean, to comply with these things. It's not a problem with sort of ways and means they have to comply with. So probably the compliance cost is more than the tax. I mean, when you talk about the compliance cost, we have to think about time cost, also your monetary cost, as well as the psychic cost. When you can't comply with something, right, then what sort of a mindset you are in? Because the tax authority, anywhere, any country, can come after you, but maybe due to your you are not well versed with the things you need, then you are in trouble. So that's why a good relationship between the tax officer and tax payer, complementing to that is the tax consultant. All the three guys or the three players, there are three key players, should understand all these things and do it in a better manner. So maybe a lot of bad things like misconduct practices are happening, but still by simplifying, as you really mentioned that word, simplifying the things, actually it's very difficult to simplify the compliance process, the forms and everything in a tax system in anywhere in anywhere in the world, I think, not on the local conditions. It's very difficult. But anyway, actually, IRD has initiated some steps for the last few years and also still going on with that. I think our second in command of the IRD, Saman Shanti, is still also with us. So he also can contribute to the discussion if necessary. And also, I think, as I understand now, those days, it was a very number of pages in the tax return. I'm talking about the income tax return. But now it's only 1 or 2 pages with the other declarations also. And if you have any income connected to a particular schedules are there, right? So if you don't have any income coming under that particular schedule, you don't need to fill that. That's another aspect. And also, not only that, we initiated another step, very important. Now there's a taxpayer service unit or officer in every regional office, as well as in the head office units also. In addition to that, there are separate taxpayer services, the staff there in the second floor of the IRD. So those are the things to simplify the compliance process and to get the maximum possible compliance as to reduce the tax gap and reach the potential revenue. So I think, as Mick also highlighted, the government is also doing a lot now, understand the situations, working with all the tax administrations really well, as I see. And I think most probably the target set for 2025, 15% of the GDP, I think it's also at a possible level, as I understand. So the compliance is very much important.
Thank you, Mr. Aparachi. I think we will now move to the Q&A portion of this panel and open out for audience questions. My colleagues will be moving around with a few mics. Please do put your hand up and call for the mic and introduce yourself, but try to keep any comments or questions to 2 to 3 minutes, since we want to give plenty of time for people to talk. And also, if you want a particular panelist to answer your question, please do indicate that as well. I think, yes, there's a mic going over there.
Thank you. Thank you. I'm Kabir Hashim. People know me more as a politician, but I'd rather talk here as a non-politician. I don't know whether the panel didn't give sufficient weightage to these tax concessions to SDPs and foreign investments, because we were, during a period we thought about, there was an era that you could get in foreign investments only through tax concessions. And I think that's more or less a myth now. There are lots of other things that bring investments into our country. This has killed a huge revenue source. We talk about a lifetime of concessions, like 40 years from the port city. Shangri-La Hotel has 30 years, right? So there has to be effective changes, because people look at this. The other thing is, moving on, when you go to corporate taxes, personal income taxes, our rates moved up. Compliance is good. You can tell people, because I'm also a taxpayer, okay, you can tell me to pay 15%. I think it's reasonable. But when you say push me to 25 and then I get pushed to the 30% bracket, then it begins to hurt. Then people start thinking about non-compliance, right? So the rates, fair rates of taxes, it's easy to say we need revenue, but I think you should make it easy it should be also affordable. And Dr. Mikmu, I do agree about property taxes. But when you take property taxes, we talk about creation of wealth to drive an economy. So it shouldn't be also something that frightens people. When you say property tax, it also must be something that people would be, again, become friendly, that taxpayers can pay. One of the biggest things, Dr. Hapuarach, we've been working together about the system, inland revenues, efficiency of collecting. I have a personal experience, because I represent a district where lots of poor people do they have this BD, they make BDs, smoke BD, right? Like, so the BD industry is big, and people talk about smoking, which is bad, but that you should take separately. Right now, people live off making BD. Lots of houses, it's a cottage industry. But in the last couple of years, the government has been trying to raise revenue from the BD industry, and they've got the model wrong, I think, because earlier, when you import BD leaf from India, they used to charge 2,000 rupees a kilo. They increased it to 6,000 rupees. That was fair, and they were getting that revenue at the source. But then there was smuggling of BD leaf. Now, instead of addressing the smuggling issue, people smuggled. Now, if the person who officially brought BD leaf paid 6,000, but people smuggled and brought and sold, and people bought that leaf, made BD out of it, didn't pay taxes to the excise department. Now, instead of solving the smuggling thing, the excise department, a new law was brought that they charge 3 rupees a BD, and they can go into all the BD, small BD manufacturers' factories, and then charge them, assess them. Part of this BD is made in houses in the village. Then they raid houses. They kill the industry, right? They're frightening them. So the collection, now it's become corrupt, because now they try to pay people off and not pay. So the system of collection must be important. And as against, people compare it to the cigarette industry and say the cigarette industry is not taxed properly. There are issues with the tax model there. So it's the same with the primary dealers who were given concessions during the debt restructuring. They were not even taxed on the super profits they made. But other people, the EPF was restructured. So there is the issue of fairness also. I hope I haven't said too many things in one go, but I thought I'll say everything. So I'm asking you all to address all that. Thank you.
Thank you. Maybe we can start with those comments and questions, and we can go on to the next ones, because I feel like there are quite a few things to cover there. Maybe, Mick, I'll start with you. There was a comment on property taxes. Would you care to? I think Mr. Kabir Hashim's comment was mostly about the fact that property taxes, that people should not be in fear of them, and are there ways in which we can make people more amenable to the idea of property taxes?
Yeah, I guess, Mr. Kabir, in the long run, if property taxes were big enough that, and of course they go to local councils, and people could actually see their local councils doing something with these, they'd be very, very happy. But, we've got, I think it's obvious to everyone, we've got a bit of a gap here. Currently, local council staff are paid by government. They're not very much under the control of local councils in practice. Council staff do not always have a great incentive to do a great job, because their answerability is to Colombo, not to their local people. And I think the same point is generally true across local councils. They have very low resources, low expectations. People don't want to pay their taxes. The Lady Mayoress of Colombo told me a few days ago that they reckon there are 110,000 commercial establishments within the Colombo Municipal Council, of which 20,000 or so actually pay their assessment rates. So it's going to be a matter of, as all these things are interactive, and trying to get over. Now, my general view on this is that if the government wishes to take up the kind of things I'm suggesting on property tax, they shouldn't be too centralized and directive. What they should be doing is encouraging some local councils, and that will probably start with the bigger urban areas, to change that system and probably give them a bit of a subsidy. Some encouragement, a little bit of a matching grant for a few years while they're getting revenue from the new system. And we could then be in a position, and there are actually plenty of examples internationally where you have especially big cities that are really badly managed because the municipal or the metropolitan council has very low revenue and can't do very much, and you have cynicism. But then you get into the virtuous circle where you begin to raise some revenue and people begin to see improvements on a day-to-day basis on, the potholes and the traffic management and the sewerage. And we can get there. But it does, I think the key thing is every local council, you have to have one or two champions. I mean, you have to have a good mayor or a good leader who actually wants to do this. And, because it needs political leadership. This is not a technical thing. I mean, there's a technology behind it, but it's actually local political leadership we really need to push this forward. And that's not an answer to your question, that's wishful thinking, I know.
Thanks, Mick. Sarah, maybe on the question of fairness of income tax rates.
And thank you for bringing that up, Mr. Hashim, because that is actually one of the biggest reasons why people don't want to also comply. Very recently, there was an exemption that basically right now, we don't have any profit-based exemptions under the Inland Revenue Act. There's nothing being afforded by the BOI. The SDP is frozen, and of course the only avenue is the Port City Act. The rationale for closing all of that is very well, but Port City is very much open, 25-year tax holiday, and I'm not able to comment about the procedure they follow there, but by and large, there was an exemption until April of this year, until March of this year, where if you brought in your foreign currency and you were basically a service provider to a person outside Sri Lanka, you were tax exempt. And that was something that was used heavily across by individuals and businesses alike. And once that stopped, I think one of the biggest proponents was, like everyone has to pay tax. These export of services. Exporters of goods are paying 30, so, But it was easier for exporters of services to spin around. Maybe I can't quite say with certainty, but they could always use the Port City route to get the exemption, whereas someone in the mainland wouldn't be able to do that. So there are distortions, there are ways and means of this thing. My personal view is that ideally the law should apply equally to all, and I concur with your view. I have nothing to object on what you said.
Thank you. We'll take a couple of more questions. Yes, go ahead.
I'd like to comment first on what Kabir said as a counterpoint, and that governments should exist, and I don't think any of us will disagree, to improve the quality of life of people. And tax policy or any policy should be an enabler as much as it's a revenue generator. And to that extent, the competitiveness of nations are based on policies all over the world to stimulate great investment, that there are tax holidays. So when the Brandixers of the world went and set up one of the largest, India's largest garment industries, it was a flight of capital because they no longer had the trust and there were better incentives there. So we have to try and identify whatever strategic investment areas which generate employment and therefore increase the quality of life of people because they get good jobs, and that should be there. I don't think we should be paranoid about tax holidays because it's a global system which nations compete on, and you have to study that. My question though, is much more related to the informal sector, and again, Kabir brought that up. But given if you walk around the Peta, you walk around anywhere and you see these monstrous buildings that have come up all over, people claim it's a flower shop or something like that. So isn't there using maybe your GPS systems that we first sit and we establish the 150,000, 200,000 kades and retailers, go to Peta, then go and find all these buildings that are doing tax dodgers through opening of flower shops or other things and just costing out, because that's the inherent fairness. Unfairness, really.
We'll take one more question and then I will turn to the panel. Omar.
Hi, my name is Omar. I'm from Factum. I have one follow-up question for Sarah and then perhaps to Dr. Hapwarachi as well. You were referring to the low percentages of tax filings when it came to SMEs and individuals, but you also referred to us being a self-assessment regime when it comes to tax filing. Would we be better off being in state assessment regimes for these sectors at least? And if you think we would be better off, but then the question is to Dr. Hapwarachi on what would it cost the IRD or the government to have a state assessed regime for tax filings? Thank you.
The voluntary, am I audible? Yeah. So the voluntary system, Oma, is actually a good thing because it gives the people the flexibility, because one of the things we do is we estimate our taxes as early as August of that year. So a year of assessment runs from April to March. And on the 15th of August, you pay your first quarterly payment. So if the state gave you how much, then it wouldn't really be easy for you to see, because you don't know how the wind, which way the wind blows. So the voluntary system is all well. My proponent more on the compliance aspect of it was to broad-base the tax system. I think that was also connected to the lady who spoke about the informal sector. If there's so few people actually, declaring their income, then what about the vast universe of people? Why should it only be the same set of people who are paying, who get audited and who pay the audited sums as well? If the tax system, the pie has to grow, is what I'm trying to say. And on the compliance rates, I would attribute it to maybe the complexity. Maybe obviously there would be the unwillingness. We know that we have personal taxes are higher than the corporate taxes. We pay as much as 36% individuals, and corporates pay at 30%. So obviously as it goes higher and higher, you will find ways and means of, nobody likes to pay taxes on their own. That's what Yolani started with. But on the compliance itself, yes, the unwilling parties will obviously find ways and means of staying away. But it's up to the state to find and use the stick where it needs to be used to broad-base a system and bring more people into it.
Actually, I'm sorry, what's the second part of the... I didn't...
Is voluntary compliance better than state compliance?
Enforced compliance. That's a nice question. Thank you very much for asking that. Of course, many countries with good tax systems performing well, reaching the revenue targets, are more on voluntary compliance. Enforcement is a little bit of a coercion approach. So the voluntary compliance is a lot of facilitation acts are there, and maybe something like praising the taxpayers who are paying their taxes correctly. And also, a lot of things can be done in that regard. A lot of awareness programs, and also commending the taxpayers, as I just mentioned, and also maybe something like recognizing them for some activities. Actually, in Sri Lanka also, we have still, I think we have that card system, gold card, silver card, someone?
We do.
But the thing is that the benefits that were proposed to give for those taxpayers are not actually due to some unfortunate reasons. I think those are not there. So the always encouraging voluntary compliance. Actually, some scholars like Professor Das Gupta and Dilip Mukherjee and so many other tax scholars, they rate the compliance, that the compliance should be voluntary itself. So the compliance is like that. I also understand, and actually in that, of course, understanding. So voluntary compliance is, your question is very good. much more, we have to give due recognition for that. Thank you very much.
Thank you. I think we're almost out of time, but Mick, if I could just ask you to very quickly reply to Shahara's question.
Sure. I think the short answer is there are many kinds of people in PETA. We know there are a lot of people who have very big businesses, who have small storefronts in PETA. Those are the people we want. If they're not paying taxes, they need to be tracked down. But I think it's very important that no tax agency gets seduced into the idea that they're somehow going to physically hunt down people who are not paying taxes. That used to be the way things were done in some countries. It's thankfully disappearing. But I can promise you that if you gave me a large squad of policemen and freedom to go into PETA and go block by block and identify people and take their details, I could generate for you a whole lot of junk data that you could not use. And all you do is waste a lot of resources and upset times. I think when it comes to the informal sector, the small person who's earning a little money, as a tax collector, I don't care. I don't care if they don't pay taxes. It's the big earners that we really want to look for. So I think we have to stay focused on the big people and forget the little ones.
So less cops and robbers and more customer relations. Yeah, okay. We'll end on that note, and I'd like to invite everyone to take a very quick tea break. We should be back in 15 minutes for the next presentation by my colleague Umesh and the panel that will follow. Yeah, thanks. But just before our panelists leave, we'd like to just give you a little token of our appreciation, if you don't mind.
I hope you all enjoy the tea break. It is my pleasure to introduce Director, Debt Research at Arutha, Umesh Moramudali, to begin the next session of the day. He will be presenting on debt dynamics in post-default Sri Lanka.
Good morning. I hope that I'm audible. So I'm going to talk about public debt dynamics in post-default Sri Lanka. As you all know, we defaulted on our debt in April 2022. And a lot of things has changed then. We have finalized debt restructuring with most of the creditors, and I would say it was a pretty rough, but now a completed right almost. So where are we now? This is the data that is extracted from quarterly debt bulletin, the latest second quarter update from the Public Debt Management Office of Sri Lanka. You can see to whom we actually owe loans. You can see significant portion is commercial debt. There are two types of commercial debt. Large portion is what you call international sovereign bonds. Globally, you call it Euro bonds. These are basically dollar-denominated bonds. That amounts to 28% of the total debt, and there's 7% of commercial debt that is obtained from the China Development Bank. Then you have World Bank, ADB, and other multilaterals that accounts for 36%. Then you have China, then you have bilateral debt. Then you have bilateral debt that accounts for 30%, of which around 15% is to China. So the fact that the Chinese role is that's around 15%. I want to establish that first because I'm going to talk a little bit more on China later on. Now this is the debt stock as it stands today. What do we intend to achieve, and particularly in the after default period? So the targets given by the IMF in terms of the debt sustainability assessment is that Sri Lanka's debt to GDP ratio has to come down below 95%. There's debate whether this is a good target or a bad target about it, but this is the target that is given to Sri Lanka by the IMF as per the debt sustainability assessment. We follow what we call a market access country framework, which is different to countries like Ghana and Zambia. They end up with a lower debt GDP ratio because they follow what you call a low income country framework. We are not qualified for that because we are of a higher GDP per capita. Then the other needs is what you call gross financing need, and it has to be average under 13% during 2027 and 32. And then foreign currency debt service should be around 4.5%, and the external financing gap should be bridged of 17.1 billion through the debt restructuring. So the Sri Lanka's debt restructuring was carried out within these parameters, and then of course the comparability of treatment, which means all creditors has to be treated fairly and equally. We are on track of all four records. In fact, I would say that we had overperformed, particularly in terms of the public debt to GDP ratio. I'll present a graph in my next slide. We have also pretty much overperformed on Sri Lanka's revenue targets. We have also pretty much overperformed on Sri Lanka's primary balance targets as well. This is where the actual public debt to GDP ratio stands. You can see that there's a significant increase in 2022 when the debt was become unsustainable. And you can see that this has significantly come down in 2024 to around 104% of the GDP. Now the interesting fact is that this is more than IMF anticipated. You can see the IMF targets here. You can see that each year Sri Lanka had overperformed IMF targets in terms of the debt to GDP ratio. And we are very likely to end up probably around 86, 87% of the GDP by 2032, which is way better than what IMF has projected, or rather the target that is given to us. Now one may ask why. One of the reasons is the IMF model estimated these things in a different way so that their targets were different, and they sort of anticipated the exchange rate to be at a higher position than what it is right now. Right? So we have done, because we have overperformed all that aspects, our debt to GDP ratio had come down much more than the IMF has anticipated. So we have done pretty well up to this point. And what is the status? I want to give a brief summary because there's a lot of confusion about it. I keep hearing people saying different things. I want to establish the fact that we have concluded the debt restructuring with the bondholders in 2024, that completely finished in December. So as with the China Development Bank. China Exim Bank actually was almost the very first bilateral creditor to restructure debt back in September 2024. Case in point here is that the China Exim Bank and China Development Bank negotiated separately, treated as two separate entities. China Development Bank was treated as a commercial lender alongside the sovereign bondholders. China Exim Bank, alongside the Japan and India, they were treated as a bilateral creditor. So there were two parallel negotiations going on. That is why there are two deadlines here. Same with India, Japan, they all have now concluded. Now what's the status with debt servicing now? Because I keep hearing that a lot of people saying that 2028 being the magical year that we have to restart paying. Actually, we had already restarted paying our debt. right? So I had given a very detailed account here. In terms of multilateral debt, we never actually stopped paying multilateral debt. Because the international norm is that even if you default, you continue to repay the multilateral debt, because they are the only creditors that will provide you, continuously provide you loans when you are in a default. This is very visible given the loans that Sri Lanka received in the last couple of years. It only came from World Bank and ADB. So the consensus is that even if you default on other creditors, you will continue to repay multilaterals. So those repayments we continue to make. Right? In terms of commercial debt, as I mentioned, we completed negotiation in 2024, and the interest and the past due interest we are currently paying. Right? So for the bondholders also, we have started repaying. And in terms of bilateral debt, we are also paying the interest payment for the bilateral debt. Right? So this is big chunk of money we are already paying. What is adding in 2028 is the capital repayments for the bilateral debt, and maybe in the next year, what will be added is some bullet payments for the bonds from 2029 onwards. Right? So in 2028 is not the year we are restarting paying debt. We have already restarted paying debt. There's probably around 700 to 1,000 million increase, around 1 billion increase in 2028, which I think is in line with what we have the net international reserves target. So there is not a significant jump as some people would proclaim or try to portray that there's a significant jump in 2028, right? But there are bigger questions, right? I've given some of the data. I must say that some of the data is not really very clear at this point. The PDMO is still being in a transitional stage. So the data I present here is based on data given by the Minister Anil Jayantha at Parliament. This is with regard to the international sovereign bond repayment structure. You can clearly see that we are intending to finish past due interest in 2027, and then you can see significant increases coming from 2029. There is a one bullet payment, and after that you can see that the bond repayments are increasing. So there is no significant jump in 2028. This is extracted from the quarterly debt bulletin of the Ministry of Finance. Right? But as I said, there are questions. So what are these questions? One is that IMF programs assumes that Sri Lanka will issue a USD bond, rather an international sovereign bond in 2027. And I assume another one in 2028. This is the assumptions in the IMF program. Will Sri Lanka do that? This is up to the government. So this is a policy decision. This is how they want to approach it. The bigger question is, do they want to do it? If they want to do it, how do they want to go about it? Because issuing a bond is not it's not a quick process. You have to have a rating. You have to improve the rating. There are dynamics attached to it. So one of the big questions is Sri Lanka going to do that? If not, what is our strategy? I believe personally that Sri Lanka could go without issuing a bond in 2027, but that again is up to the government whether they are going to make that policy decision. Second question is, which I consider as a bigger question, will there be sufficient institutional change before we issuing bonds? Because there's a big institutional change happen in terms of debt management in Sri Lanka. Previously, debt management was done by two or three institutions, External Resource Department, Central Bank issued the domestic debt, including the international sovereign bonds. Right now, the international sovereign bonds will have to be issued by what we call the Public Debt Management Office. This is a newly set up institution which is not well equipped like central banks. I think I'm talking very frank here because I think it's important we put this out there. Central bank, of course, is well equipped, well experienced. I'm not trying out Dr. Chandranath Singh is here, but central bank actually has capacity and they have built the capacity over the years. Now we are trying to shift that debt management function, particularly with regard to dealing with external market borrowings from the central bank to the Public Debt Management Office, which is important and needs to be done because debt management is not central bank's responsibility. It is a fiscal matter that has to be dealt by the Ministry of Finance or an independent debt office. But the question is, does the independent debt office, or rather it's not an independent office, rather the Public Debt Management Office, does it has the capacity to do that? We do have time to build the capacity. The question then is the government serious about it? Are we paying enough attention to this, right? So that is one of the bigger questions that I want to put to you today. So this is the situation in terms of the debt management. So what are we going to do about the next loans? Let alone the international sovereign bonds, what about other bilateral loans, so on and so forth. Now, unlike before, Sri Lanka is constrained to take more loans. We are still in an IMF program. We cannot be taking loans as we wish, as that was the case in the past, right? What we see is like after 2022, there hasn't been any bilateral loans because we are in default, right? As I mentioned before, almost all the loans had come from multilaterals, ADB and World Bank. Some of the ADB loans are listed here. They prioritize, for example, the social safety nets, small and medium scale enterprises, so on and so forth. So whatever the new lending comes in future, that has to be within the debt sustainability assessment targets, as well as the public expenditure that is capped at 13% under the Public Financial Management Act. These are done to ensure that the fiscal consolidation is done. So in a way, you cannot really prioritize a lot of projects based on your political whims like that was in the past, right? And what does this mean what are the implications of these foreign funded projects or foreign loans? Is that you will not have the kind of export credit. Let's say, for example, a foreign company, whether it's a SOE or something, comes and pitch to say, like, we are willing to fund your loan, let's build a port, let's build an airport. That we can't do now, right? On the other hand, it is also very difficult for other foreign banks, such as China Exim Bank, to do that because now they had incurred losses. It's a whole different dynamic because unlike previous case, now they are much more cautious. It's like you are like a bank, you lend excessively, and then few of your creditors, go bankrupt. Now we are much more cautious in lending. So what do we see now is there's a case that we can see what's happening with upcoming bilateral lending, particularly with regard to China, through the Central Expressway loan. Now the Central Expressway loan was signed in 2019, but 90% of that loan was not disbursed. It came to a halt because of the COVID and then subsequently the economic crisis. Now what did happen to this 90% of this undisbursed amount sort of provides us a reflection or an idea what Chinese lending is going to be. What we see with that is that loan is it's about a 950 million loan initially. Now it's supposed to come down to 500 million loan. Instead of USD dollar denominated, this will be shift to a yuan denominated loan with a relatively higher interest rate. It's a flexible interest rate with a cap of floor of 2.5 and a cap of 3.5. Previous interest rate was 2.5 fixed. Now you can see that the China Exim Bank is trying to do two things. One is to reduce the loan amount significantly, almost by 50%, and also move into a flexible interest rate. Again, both of these things are done to curtail the risks, unlike in the previous times. So what does this mean is, whatever the bilateral lending, including from China, is going to be very cautious. It's not going to be easy as much as it was the case in 2000, let's say, 5 to 15 period. What does this mean for the foreign contractors and SOEs? Unsolicited bidding is now restricted. For example, in the past, most of the projects actually went to a lot of contractors, Chinese contractors or Indian ones, a lot of countries. I don't want to pinpoint at one country here because then this whole becomes like only China doing this. But a lot of Chinese companies did it. Most of it went through unsolicited bidding. There was no competitive bidding. Because of that, there was inflated cost. Now, this is almost impossible to do due to a couple of reasons. One is that the IMF is quite serious about Sri Lanka's governance. Secondly, the government has a mandate to honor that they are elected on a premise that they will not be doing any corruption or they'll be more accountable and more transparent. So doing projects based on unsolicited bidding would not be very politically feasible for them. It would not, I assume it would not be politically popular thing to do. And what does it mean is there'll be rising competition among particularly Chinese SOE projects to work together, or rather compete even within Sri Lanka and move towards investment, which is what we see with the Sinopec refinery. So Sinopec refinery was not an unsolicited bid. That was actually Sri Lanka called the expression of interest. Sinopec went through the whole 9 yards of pitching for this project, and they won the bid. Then only it was granted to them. So you see that shift, and if anyone is doing, any Chinese SOE is doing businesses in Sri Lanka, they'll have to adhere to this, because that is not only internationally but also the locally becoming the norm, which is a good thing, right? We have extensively highlighted about this in the upcoming Arutha report on Sri Lanka, China SOE's presence in Sri Lanka. And as I said, Chinese SOE's presence is shifting from debt to investment. Sinopec refinery is going to be an investment, it's not a debt finance, right? Because it's not a debt finance, you can see that, because I think the Chinese SOE is also understanding that it is difficult to finance these projects through debt, because given Sri Lanka's constraints in terms of the debt. And also, interestingly, we also see Chinese SOEs pursuing a lot of multilateral projects. For example, when ADB or World Bank is doing a project, we see number of Chinese SOEs competing to get those projects, and some of them winning it and getting that project. So it's a better way for them to get their businesses. One of the biggest large example is the Upper Alahara Canal project by the ADB. It is China State Engineering that is doing the contract, and that is a ADB project. So that's not a China project, it's an ADB project that is carried out by a Chinese SOE. I assume we will see this model more and more in the future. And we also see Chinese policy banks are reducing the amount of lending, reducing the contribution. For example, in the case of Central Expressway, total loan amount supposed to be around 980 million. Now China Exim Bank is only providing the 500 million. That means there's about 480 million that has to be financed by the government, right? That has to be financed by the government. This has to be paid to the Chinese SOE, which is the contractor. Now, with this, what we also see is that Sri Lanka also may be shifting to domestic funds and domestic contractors, right? This is, we can see with the phase 3 of the Central Expressway that is awarded to local contractors, I think from Potuhara to Rambukkana section. That was initially supposed to be constructed with the support of a loan from Japan, but now that is shifted to a local contractor. Again, the contract was awarded based on competitive bidding. So these are good practices. So the consequences for this is there's obviously a higher multiplier effect on the domestic economy when the domestic contractors are carrying out the project. Not essentially saying that the foreign contractors are bad, but when the domestic contractors are more involved in the economy, that has more multiplier effect, and that drives the growth much more than an entirely foreign contractor carrying out the project. Then there's also increased competitiveness and also the better governance. So these things are shaping better, but also this is in the context that I previously put in terms of the debt management. Are we ready to make that institutional change? Because I think previously in the panel, we talked about that the IRD did not make the institutional change that it's supposed to digest the kind of sophisticated economy that we have, and that's one of the reasons why we couldn't really increase the tax revenue. We might be going in the same path if we do not reform the institutions pertaining to debt management, which requires highly technical capacity and highly well-paid professionals to attract into that. And the important thing is we are not too late to do that. This is at the initial start. Rather than reforming IRC, which would be a rather difficult exercise, reforming the PDMO and making it a better institution is rather easy thing to do, because still it's at it very outset. So I'm going to leave it out there, and then we can talk about the rest in the panel. Thank you very much.
Thank you, Umesh. I now invite the speakers of our final session. Joining us for this panel are Dr. Chandranath Amarsekara, Rumali Tudave, Umesh Moramudali, and this session will be moderated by Shaheen Abdul Ghani. Dr. Amarsekara is the Assistant Governor of the Central Bank of Sri Lanka. He previously served as the alternate Executive Director at the International Monetary Fund. He brings with him expertise in macroeconomic policy, debt management, and international financial cooperation. Rumali Tudave is the Chief Executive Officer of Tudave Brothers Private Limited, one of Sri Lanka's long-standing construction companies, and she is an advisor to Arutha. Umesh Moramudali is an economist and an academic, currently serving as Director of Debt Research at Arutha. His research focuses on public finance and public debt, particularly in China-Sri Lanka relations, as well as the middle-income transition and the political economy of the middle class. Umesh is set to commence his PhD at the University of Manchester this year. Shaheen Abdul Ghani is a research assistant at Arutha and a recent graduate of the University of Nottingham. Her most recent work centers on the political economy of Sri Lanka's 2022 sovereign debt crisis, alongside wider interest in social equality and green finance. Before we begin our second panel discussion for the day, I invite Dr. Amarsekara to deliver the opening remarks. Thanks.
Thank you very much, and thank you very much for the invitation as well. So we all know that we went through an unprecedented economic crisis. And if you look at any macroeconomic indicator for the year 2022, I would say many, you would see that that was the worst year in our economic history. So take GDP growth, 7.3% contraction, which was one of the 5 annual contractions that we've had during our post-independence history. If you take inflation, it hit 70% in September 2022. If you take exchange rate, depreciation was the highest in 2022. If you take the reserves, the usable reserves were non-existent by April 2022. If you take revenue to GDP ratios, if you take the period from 2020 to 2022, I think we've had on average 8.4% of GDP as revenue to GDP, which was one of the lowest in the world. So that's where we were, and that standstill was had to be announced in April 2022, and of course we know about the rating downgrades before and around the time of the debt standstill as well. So unprecedented crisis, and this crisis had to be addressed decisively for the country to move forward. What were the remedies? Of course, there had to be fiscal remedies, there had to be monetary remedies, and as I said, the debt standstill, debt restructuring had to be started, and also the IMF had to be approached. When you think about these remedies, they are all interlinked. So essentially, the IMF is supposed to be the global lender of last resort, and even the IMF told us that they cannot lend to us. We go to the global lender of last resort, and they tell us that we cannot lend to you because your debt is unsustainable and your policies are not sound. So the efforts had to be taken to enhance revenues and bring the budget deficits under control and start generating primary surpluses from the fiscal side. From the monetary side, we had to raise interest rates massively, 7 percentage points in April 2022 and some more later on, to ensure that inflation, the increase in inflation, would be contained. It would take a while, but we'll talk about the results later. Like Umesh explained, we had to undergo a very, very complex debt restructuring process. It had many stakeholders, and discussions had to be started. And at the same time, there was no freely available framework that we could depend on. For the low-income countries, there was a common framework that was acceptable to many, but for middle-income countries, there was no such thing. So we had to start engaging with multiple stakeholders, domestically and globally, to regain debt sustainability. So that process, as Umesh said, is almost complete. There is only a couple of things left for the entire process to be completed, and we are already seeing sovereign rating upgrades happening. And the IMF program is ongoing. We are halfway into the IMF program. We've received $1.7 billion from the IMF thus far, and another 1.3 billion will be dispersed over the next 2 years' time. We've seen the results of this stabilization, very difficult stabilization program in a macro sense. You see the improvements if you look at the monetary numbers, if you look at the fiscal numbers, if you look at the external numbers, and even in the real sector. When you look at growth is back in the positive territory, and we expect this growth process to continue, but again, that would require a lot of effort. So essentially, in summary, what we have been telling as the central bank over the past several months is that stability has been regained, but there's a lot to be done. I mean, we are not out of the woods yet. There's a lot to be done, particularly in terms of the growth strategy of the country. That would be the remedy to address many debt issues as well. But how do you, the question is, how do you generate growth in this country without having a severe impact on stability? So I will stop there, and we can discuss in the panel discussion. Thank you.
Thank you, Dr. Amarasekar, for your opening remarks. And it's ideal that you spoke about the role of the central bank in monetary policy, because that is the first question that I'd like to pose. And that is, since the peak of the economic crisis, Sri Lanka has made significant progress in reducing inflation to single digits. And inflation is generally managed by the monetary policy, which is the responsibility of the Central Bank of Sri Lanka. Could you explain how the central bank used monetary policy to achieve this, and comment on the importance of its independence and authority to implement this policy?
Thank you very much. So essentially, inflation could be driven by two things. One is the demand side, and the other side is supply. So so it is the responsibility of the central bank to keep inflation under control, and we have an inflation target of 5% that has been agreed with the government, and that is published. And under the new Central Bank Act, under the new flexible inflation targeting framework, it is our responsibility to ensure that inflation is maintained at 5%. It is monetary policy that is used as the main tool of ensuring that inflation is well contained. Inflation is maintained at 5%. So if you go back to 2022, as I said before, we had to raise policy interest rates in one go in April 2022 by 700 basis points, 7 percentage points, to make sure that galloping inflation that we were seeing at that time was brought under control. as I said before, inflation shot up to 70% year on year in September 2022. If by any chance the central bank, there was no action from the central bank at that time, there are three scenarios. There are three counterfactuals there are two counterfactuals we can think of, and what happened was the third scenario. The first counterfactual is no action by the central bank. If that was the case, by now we would be seeing that 70% inflation going up and up and up, and Sri Lanka being in a hyperinflation situation. This is not uncommon. We have seen this happening in other countries. Two examples. Of course, I mean, there are examples from the past, during the inter-World War period and so on, but let's take recent examples. One is Venezuela. In Venezuela, in 2018, inflation shot up to 130,000%. And in Zimbabwe, in 2008, inflation was as high as month-on-month inflation was as high as 79.6 billion%. So there was, if by any chance we couldn't control inflation going up, we could have been in that situation. You never know, because that never happened. Actions were taken, so we didn't get there. We are complaining about cost of living today, but imagine a situation where we could not, as the central bank, could not control inflation, and inflation continued to go up. Where would cost of living have been if that was the case? So that's the first counterfactual. The second is there was not inaction, but little action by the central bank. If that was the case, we would have had a situation where controlling inflation could have taken a long time. But in the case of Sri Lanka, this 70% inflation came down to single digits within 10 months of that peak. It was possible by decisive monetary policy actions, decisive interest rate increases, and decisive liquidity management. Market liquidity had to be maintained, and also letting the exchange rate float, because it was necessary for us to make sure that the exchange rate reflects the true condition of the country as well. So those were the three monetary policy decisions that were taken, and as you know, inflation came down to single digits by July 2023, and we had a period of temporary period of deflation, and now we are back to positive inflation territory, 1.2% year-on-year inflation. And with that, we have also been able to reduce policy interest rates, so that the difficulties that the public and the companies were facing because of high interest rates are being eased at the moment. So that's what's happening now, and I think overall the impact on growth through difficult monetary policy decisions has also been sort of contained, as we see now in growth projections as well. The role of independence of the central bank. So most of those stabilization measures, like Governor said that his 75th anniversary oration that was delivered last week, most of those decisions were taken under the previous Central Bank Act, the Monetary Law Act. So that showed that if the central bank is allowed to act independently, we can do a lot of things. And under the current governor's leadership, that's exactly what happened. But was that enough? Not really, no. There is no assurance. There was no assurance that, because decisions were person-dependent under the Monetary Law Act, that stability would continue in this country. That's why a new Central Bank Act had to be introduced, and in the new Central Bank Act, there have been multiple changes introduced to the monetary policy and central banking framework of the country. In particular, monetary financing, or what is generally known as money printing, is no longer possible. And the Treasury's representation at the central bank boards is no longer there. And also, the central bank is made more accountable and transparent under the provisions of the new Central Bank Act. And I think I will stop there, and thank you.
Thank you, Doctor. The next question is for Umesh. Many SOE projects that you have analyzed in your recent study were shaped more by political priorities than national development plans. What institutional reforms are most urgent to prevent politically motivated projects that are economically unsound for Sri Lanka?
Thanks, Shaheen. I think one is you have a sort of we actually do have a physical plan for this country, which is hardly being followed. I think one good starting point is to follow the physical plan, which is quite straightforward and simple, to be honest. And then is to present this, avoid what you call the unsolicited bidding. Some of the projects that happen in the past happen in a case like this. For example, some foreign company, whether that is a Chinese SOE or something, comes and pitch to Sri Lankan SOE or to Sri Lankan government. Then they find it appealing, and because they find it politically appealing, they go ahead with the project. That is not a sustainable way to do it, particularly when you have fiscal constraints. So I think way is okay, you follow the physical plan. In addition to that, you have checks and balances within the government and also within the parliament. What structure that would work is up to the debate. I'm not going to lay out the specifics of it. But I think if Parliament can also scrutinize either through, I think, Committee of Public Finance or COP in the case of SOEs, that would bring more scrutiny and thereby would avoid why are we going ahead with this project. Now, for example, we see now Committee of Public Finance in some cases scrutinize or ask questions about on what basis some of the tax concessions are given for some of the investment projects. You could extend and try to do the same for some of other large-scale projects. Why do we need this project, and whether this project is in the physical plan, and whether this project is within the DSA or the fiscal parameters that we are supposed to adhere to. Yeah.
Thank you, Umesh. The next question is for Romali, and we're rewinding back to the beginning of the economic crisis, during which the construction sector faced major disruptions, including financing difficulties and material shortages. How did the industry restructure its operations, financial management, and sourcing strategies to navigate these challenges that we previously had not faced at that scale?
If I'm not clear, please let me know. I also have this terrible habit of timing my answers so as to not bore you. So that's why I'm fiddling with my phone. But I'm going to approach this question in two ways. One is how the industry sort of lobbied during this period and how they behaved. And the second part of the question to your how did the operations, financial management, sourcing strategies, I can only explain from our personal experience. So just starting from how the industry reacted. In January 2022, when we first defaulted and the announcement was made, this was an entirely new event for all of us. So obviously the first thing we do is we go and Google what happens. And there's a surprising amount of information that was available as to what happens to the economies of countries that have defaulted. Majority of the research that I did was just directly from the IMF website. And one critical thing I noticed, which petrified me, was that generally when a government is in default, everybody sort of focuses on government debt holders and bond holders. But due to the fiscal crisis, contractual creditors are also defaulted. So who are these contractual creditors? They are your pharmaceutical industries that are providing to the government. They are your energy suppliers to the government, your contractors, defense. Almost everyone who is a supplier of goods and services to the government also gets defaulted. So when this came out, we tried to tell the rest of the construction industry about what is to come, which is that, it's not the government's fault. They just don't have any other option. And they're probably going to focus on very important things like the health and safety and food situation of the people rather than pay what is due to you. So when this was conveyed, there was absolute disbelief in the industry. They just did not accept it. But come April, New Year holidays, labor is not paid, and there is a huge deficit to the construction industry. That's when everybody sort of started sitting down and discussing this with earnest. So there were two options for us. And as Dr. Chandranath said, they had to control the inflation. So the data showed that the central bank will definitely increase interest rates, which means throughout the year, the money value that the government owes you will slowly erode over time. So we had two options. One was get paid now, take a haircut. Again, a very difficult thing to explain to contractors. And secondly, to have an exchange in kind, like a bond. Also a very difficult thing to explain to contractors. So what we did was we went on a massive educational spree, for which two partners helped us, Cal and Equity. We had a huge bond awareness session, where I think first time I've seen about 30, 40 major contractors crammed into a single room trying to listen to an explanation about what a bond instrument is. And of course, at the time, Bhuvanekaba, who is the CEO of the Chamber of Commerce now, was heavily involved in helping us structure this and explain it to government agencies. And once we convinced the contractors that this is probably the best way we can approach the government, what we next did was every single opportunity we had, we spoke with a solution-oriented method, which means at the time what I noticed is a lot of the industries just explain the difficulty they're in and they ask the government for help. But you have to provide a solution to the government because the government is in a very tricky situation. So when we were proposing suggestions, one thing we proposed was this bond transaction, because it creates a debt. It doesn't require liquidity from the government immediately, and it's a tradable instrument, so it either helps the contractor's balance sheet or you can trade it in the secondary market and create liquidity. So it was a good win-win solution. Although some of the literature I read did say that this is not the best solution, we still thought that that was the most appropriate. So once we started doing that, to the government's credit, within 9 months, they gave us the bonds. It's my personal belief that they did that because of construction's exposure to the banking sector. I can't guarantee that that's the reason why, but at the time we were doing the research in 2021, commercial exposure to construction, retail exposure to construction was 20.1% of total banking exposure. This doesn't necessarily mean it all went to contractors. It went to developers, anyone who had a housing loan, all the contractors, any material suppliers. So it was a large segment of exposure. And I personally believe that's why they settled the industry, because of our exposure to the banking sector. And banking sector integrity is utmost in this situation. So that's how the industry handled it. Surprisingly, we also had to convince the banks that this was a good idea. Because we met them multiple times. We met banks through the Chamber of Construction multiple times to explain to them that once this comes, this will stabilize us. And I believe a lot of the banks did buy the bonds from the contractors. Is it too long, or can I go to the second one? All right, okay, fine. So I will not explain how we survived, but we did survive.
Thank you so much. We'll now proceed into the second round of questions. Just in the interest of time, if we can have your answers to be a little concise so that we can move into the Q&A in time. We're now going into the second round, and the question is for Dr. Amarasekar. We reckon that restoring investor confidence in the economy right now is key. What concrete steps can the central bank, the government, and policymakers at large take to rebuild this trust with both domestic and international investors?
Limit my response to a couple of points. One is that the investors usually look for policy consistency and predictability, and also institutional credibility. From the central bank side, now we have an independent central bank, and that provides comfort to investors domestically and globally. At the same time, we have a Public Financial Management Act in place, and as discussed earlier, the Public Debt Management Act. So those three acts together should, if they work well, should provide ample confidence to investors. From the monetary policy side, there is assurance from the central bank that inflation would be maintained, inflation would be under control. From the fiscal side, the public financial management in particular should provide that comfort that the fiscal deficits are under control, and the government as well as the central bank remains accountable to the people. So that's one. And the second one, of course, is the anti-corruption measures that are being taken. So there is a strong anti-corruption act, and the CBOC is now being operationalized, and that in Sri Lanka, I think all domestic stakeholders as well as international stakeholders, something that they often said is containing corruption is macro-critical for Sri Lanka. So if those efforts continue the way they are designed, I think that should boost confidence on the Sri Lankan economy. And the third one, I should also add that Sri Lanka should learn lessons from the crisis. For example, because of the multiple stakeholders that we had during in the restructuring process, I think one of the key lessons is that you cannot make enemies in this world. You have to keep everyone happy. You should be friends with everyone. For Sri Lanka, I think that was quite useful. And all countries, all member countries of the IMF helped us in the restructuring process, and also in our efforts to seek IMF assistance as well. So that was very helpful. And I will stop here. Thank you.
Thank you, sir. Interesting place for you to stop, because the next question, Umesh, is about our relationships with other countries. Do you think that China-Sri Lanka relations in particular have shifted since the economic crisis, particularly given that the Paris Club signaled its willingness to restructure Sri Lanka's debt and India extended foreign aid, both before China did agree to restructure?
Well, it's not an IR forum. I think I can speak freely. So I think China initially lagged quite a lot to provide financial assurances. That's true. There was global political pressure for them. From what I found out by speaking to multiple stakeholders and through research, is that Chinese Exim Bank and China Development Bank had problems initially to provide the financing assurances, because they were not really comfortable with IMF's debt sustainability analysis. So they had a policy level problem which they tried to push. How did they try to push it? By they kept asking why multilateral banks are not taking any haircuts or anything in any debt restructuring. How is this fair? This is a very valid question coming from them, because they are the largest bilateral creditor for most of the countries in the world, particularly for the developing world. And they had to play by the rules set by the Paris Club, which they are not part of. So they were not quite happy with this. They tried to push it, but I think at the end of the day, they realized that this is not going to change in the short term. So they went the pragmatic way and resort to provide the financing assurances. I think there is some discussions with IMF that persuaded them to do so. But once they agreed, once they provided the financing assurances, they moved quick. In fact, as I mentioned in the presentations, they moved quicker than everybody else. They were actually the first bilateral creditor to finalize debt restructuring, which was easy for them because they were negotiating outside the official creditors committee. They were not a part of the Paris Club, so they could finish this on their own rather than going through an multiple stakeholder institution. I think what right now happening is that China is being pragmatic, as far as I say. I'm focusing this largely on China because they are the key player here. That is why we see they are not really trying to antagonize or refusing to give loans when they initially made up their minds. And what we also see is that they're shifting towards more investment financing modes as opposed to debt financing modes. What we actually need to realize is when we focus about the China-Sri Lanka relationships and overall geopolitics is that China is actually not a unitary actor. A lot of people see China as a one actor, which is not. China is very fragmented, very fractured. Their institutions, their banks, their state-owned enterprises function independently. For example, China Exim Bank makes decisions based on the short-term profit. It same goes to Chinese state-owned enterprises, may that be China Merchant Ports, may that be China Harbour Engineering Corporation. Thereafter, their commercial interest first. Of course, they has to, at the end of the day, be answerable to the State Council, but they're very fragmented. This is not Sri Lanka issue, this is a very global issue how China functions. So when you see this issue, you have to see this in the context of seeing with fragmented entities which have different interests driven by different commercial incentives. And then that has to be finally managed with the overall China's geopolitical and political. So there is delays with that, but I think at the end of the day, what I can see is they are pragmatists, they have been.
Thank you, Umesh. Unfortunately, that's all the time we have allocated for the panel. I'm really sorry about that. We will now move on to questions by the audience. If we have people in the audience who have questions, we have a couple hands raised in the middle and one to the left-hand side.
Thank you. I have a question about guaranteed debt. So there was a Sri Lankan sovereign guarantee for a 175 million bond for Sri Lankan Airlines. My understanding is that that's technically still in default. Given that, what are the implications? That's first example. Second example is there's a 33 billion Sri Lanka rupee loan that was given to an entity that is completely incapable of repaying it, that is the Kotalawala Defence University Hospital. And it's again a government guaranteed debt. I have looked at the annual reports, there's no way that they can pay 33 billion. What is the situation with these kinds of, so one example, international, one example, domestic. What does this mean?
I believe I should take this. So in terms of the Sri Lankan airline bond, so I think the first round of negotiations completed, I think that didn't come out succeeded. I think they will keep negotiating this. My understanding is, so I'm not privy to the conversations or the negotiations. I don't think any of us here are. So I think there'll be more discussion rounds because this is how negotiations work as we've experienced with the other bondholders. We had several restricted rounds of negotiations. One you end up and then you try to renegotiate. I think the government didn't really agree. I am personally optimistic about the Sri Lankan airline bond. Probably they will reach a solution for that maybe in the upcoming 6 months or so is my reading. This could differ. We are talking about it very limited information. With regard to Professor's question about KDO debt, I am not in a position to provide an answer because I do not know much about it. I know this loan exists, but in terms of how this will be restructured or not, I genuinely don't know. I don't want to comment on something that I don't have a substantial understanding on. You have anything to add, Dr. Chandra?
So let me also plead my ignorance on the second one, but just to add to what Umesh said about the first, I think we have been upgraded by 2 rating agencies because most of the debt restructuring is over, but one sovereign rating agency, one global sovereign rating agency considers guaranteed debt also as a part of something that had to be completed before a rating upgrade is considered. So that is a concern, and I'm sure the government is working on it.
Thank you, sir, for your question. We have a question on this side. Yes.
My name is Gregory Smith from IFC World Bank Group. And I really welcome the discussion on credit rating, which is now a triple C. But to get meaningful market access, perhaps you need a single B rating, which Sri Lanka had in the past. And the first panel talked about revenue being 15% of GDP as sort of something that's going to be really hard to budge up. With interest burden still so high, interest payments to revenue are about 50%, and the median for a single B is 10%. So there's a huge move somewhere post-restructuring to try and get that ratio down. And I think that's the headache. And I think the debunking of 2028 you've done is fantastic at Arutha, saying that's the problem and that's the hurdle. I think it's just a heavy rucksack that the country has to carry with 2/3 of the debt's domestic, and you're paying back many bonds at 18 and 20% at the moment still that will persist for the next 5-7 years. So I think there's been a fantastic move to stability and solvency, but the next step I think is really tricky, and it's the hard yards on revenue, which I think are really crucial for the credit rating. And then whatever can be done to sort of improve investor confidence. And that's sort of, where my question is. And I just want to ask if you think the government's doing enough to sort of promote a new sort of approach to active borrowing, to investor communication, to win back the hearts and minds of various investors that lost a huge amount of money during the crisis, and what can be done about that, because I think that's crucial. And I think the question is not whether the country defaults in 2028, it's really about the $3 billion the IMF put in between now and the end of 26. Where do you get $3 billion to pay them back? So it's either going to be that you borrow that from the international markets, or you have another IMF program, which has its own political consequences. So is the government doing enough to bring the credit rating back to a reasonable level?
Thank you. Can we just take one more question from the audience before coming back to that? There's a hand raised here in front, I see. There's a couple hands raised.
Can I?
Yeah, go ahead. Sorry, apologies. Yeah.
Right, because it's a bit connected also. I think as the assistant governor told us, I think the Central Bank Act that was brought last year was crucial for the country, and especially that monetary policy was not being used as a stimulant for growing the economy. So that has helped us a long way. But from what Umesh said, Governor, what I would like to know is that I also think that we had to make some payments this year, despite the 2028 thing, right? Because bilateral loans, multilateral loans, the Reserve Bank of India saw restructuring costs. My figures say that we had to pay something like $3 billion in this year, that we've been paying through this year, something like $3 billion if you add all these up. So that would have put some pressure. And if you look at our reserves between December 2024 and now, June or July 2025, our reserves have come down a few, just marginally, but despite the fact that central bank has been trying to show up the reserves. So that's not a good sign. On top of that, our revenues are being raised by imports of motor vehicles. There's quite a lot of revenue coming, but again, pressure, right? Now, the question I'll ask is, the Public Debt Management Act was brought in. The Public Debt Management Committee comprises Central Bank and the Ministry of Finance members, and the responsibility comes on you all. As much as the Central Expressway is critically essential for the country, as Umesh explained, it's a $993 billion, 993 million, out of which $500 million is being given by China Exim. They've reduced it. The balance, the president said, was $493 million was going to be raised in the market, in the local market, or it's going to be funded by the Treasury. Now, even if it's local contractors, construction comprises imported material, right? It's steel, cement, etc. And that again puts pressure on our exchange rate. Now, has this been run through the Public Debt Management Committee? Have you looked at because looking at repayments coming in the future and looking at our revenues and dollar revenues, have you all considered all this and got these approvals? Because we have laws that are brought in, but we are always, we are the first to break the laws. When I say we, politicians, right? So I would like to know what's happening.
Thank you, sir. Perhaps those two questions can be taken by the governor and Ms. Romali.
So I can't speak on behalf of the government, but we have representation in this committee on public debt management, and our director of economic research, who's here, represents us at that committee. So I think we are just starting with the public debt management office. Like Umesh said, there's a lot to be done, and the act is being operationalized. I mean, this starting to be operationalized only now. So we are yet to see how it would progress, and I have confidence that it would progress the way we want to, but a lot of improvements are necessary. I think Umesh highlighted some of those. Let me comment on reserves. Yes, you're right. I mean, we had about 6.1 plus reserves, 6.1 billion plus reserves at the end of last year, and even at present, reserves are at around the same levels. And as you said, this is in spite of the central bank efforts to accumulate reserves from the market. So essentially, we have purchased from the market $1.2 billion of forex into reserves this year. Last year it was 2.8 billion, and in the previous year it was 1.9 billion, and so on. Quite a lot of effort. When you add these three numbers, it's as much as the level of reserves that we have now. Again, I think we should go back to something Umesh said earlier. Because of the restructuring, there has been delays of disbursements of foreign loans from others other than the multilateral lenders. So we have been receiving forex from, the government has been receiving forex from the IMF. This time IMF funding was budget support. IMF, World Bank, and the Asian Development Bank, and and we have seen some slowdown in disbursements from the other stakeholders, particularly bilateral. So when those disbursements start, I suppose that would also help our efforts to bolster reserves. But if these are delayed, of course, we will not meet the projections of the IMF on reserves, but they are only projections. The IMF gross official reserve figures that are published at the end of the document, they are only projections. The target is on net international reserve build-up, and we have already met the target for, this is yet to be confirmed by the IMF, but we have already met the target for September in terms of net international reserve build-up, and we are very confident that we will meet the December target as well. On official reserves, there is that question mark, but things are moving, so we are hopeful.
I'm going to move really quickly because of limited time. I'm also going to be very technical, so I apologize. With relation to the Central Expressway 1 package, that is the most critical package, because otherwise you have Central Expressway 2 starting from the middle of nowhere, going into the middle of nowhere. So Central Expressway 1 is essential for us. It's also one of the unsolicited projects that Umesh spoke about. I'm purely analyzing this as a lawyer now. It's more costly to terminate the project because though it is suspended, it is still incurring cost. All of these construction projects you see around Colombo are constantly incurring cost. So when you terminate them, you also have a loss of profit claim. So the government probably did an analysis to say, okay, it's easier to go with the existing contract and to pay the damages rather than to terminate and face a bigger loss. That's what I'm assuming happened there. Secondly, when Umesh spoke about the Central Expressway 2 projects that are going to Galagadara, which are coming from the local contractors, I'd like to alert the public to one specific thing. At the moment, there are multiple contractors engaging in what we call a race to the bottom, which means that they are anti-competitively pricing extremely below the engineer's estimate, sometimes 30 to 40% below the engineer's estimate, and all three contractors of the Central Expressway is awarded to one contractor. That is going 30 to 40% below the engineer's estimate. These projects are financially not feasible. They are likely to end with a bigger cost than what they were procured for. And it is extremely difficult to explain to parties what anti-competitive pricing is versus what is corruption is. So though anti-competition, though anti-corruption is very important, I think this government and these authorities have to be mindful of what is anti-competition as well, which is an issue in the domestic market, not just in construction, but in virtually everything we do. So in the future, what the government is creating is a monopoly. Why? Because they are giving it to a few stakeholders who price low enough to manage to get the contract. But what will happen in the future is only these contractors will qualify, and you will only have one contractor or two contractors at most subscribing for competitive bidding. So yes, we fixed one problem, but you're creating another problem. So the sooner we look at this, the better that we'll be able to stabilize. I hope those two answers solve the problem with the two Central Expressway questions.
I'll add a small thing to what Greg's question on ratings. I think two sides here. One, in terms of thus far, we have done well in terms of our macroeconomic targets, including the tax. The question is, as we pointed out earlier, can we raise the same amount of taxes from vehicles next year, so on and so forth? Therefore, can we stay on? I think for the longer term, it again comes to the fact that how well we can strengthen the revenue administration, thereby collecting more revenue and expanding the tax base rather than keep increasing the taxes, which is a difficult thing. And also to put into the context that we are supposed to phase out the para-tariff. PAL and says at some point we cannot keep it for another 10-15 years. The agreement with the World Bank and general consensus is to phase out the PAL and says. So at that point we have to have more revenue administration to pick it. In terms of communicating this to investors, my worry is that when we shift from when the transition is complete of the PDMO, kind of your marketing your debt becomes PDMO's responsibility. Earlier it used to be central banks, no longer central bank will be handling this. And right now Sri Lanka has the assistance of, I believe, Clifford Chance and Lazard, because they are still working with Sri Lanka as far as I understand. So you see them doing the investor presentations for the time being. The question then is, when PDMO, Public Debt Management Office, have to do this by themselves, do they have the capacity to go to market and communicate these things clearly to the investors, work with the lead managers, and then sell the bonds or deal with the capital markets? For me, I don't see that being done well. I don't think enough focus given on that. So I think what Greg said depends on how well you build up the capacity of the PDMO.
Thank you so much. Unfortunately, that is all the time that we have for our questions, but the panelists will be around during lunch if you'd like to speak to them over lunch. And with that, we can break for lunch. Thank you to the panelists. If the panelists could just stay on stage for a token of appreciation.